There we are. Hopefully, you can hear me loud and clear now. But I've moved office this morning. I've moved to a new office. I'm on the second floor rather than the first floor. The acoustics should be a bit better in here, but we'll see. I really appreciate your feedback, those of you that are watching and listening. Hopefully, learning a little bit. Who knows? I've still got the same kit, so let's see if we might need an upgrade. But anyway, hope you're all well. Let's just get me a bit smaller. Obviously, the news is driven. Before I do that, I'm just going to, obviously, we need to be watching Washington and Tehran and obviously our news feeds. Interesting story this morning from Reuters talking about with three or four different sources about military planning from the US. The infamous boots on ground has obviously had to be kicked around as a potential option. A very, very difficult political call that for Trump, who was, he's a massive, massive advocate of getting out of foreign wars, and his MAGA base is up in arms about what's going on at the moment. The whole legality of as far as US and international law is concerned, with regard the invasion, not the invasion, but the war, obviously initiated by the preemptive strike by Israel. They call it a preemptive strike on the pretext that Iran was about to attack them. Anyway, big, obviously, issue remains the Strait of Hormuz and the energy crisis. And I'm going to call it a crisis because that is what's happening now. The attack, again, apparently the US knew about it, but Trump, quite understandably, throwing his toys out the cot overnight about this, the independent strike by the Israelis on the massive gas field that is shared between Iran and Qatar. Remember, Qatar is the most, because of its links with Iran, is the most sort of pro-Iran, if you like, of the Gulf states. And again, it's to do with Sunni and Shia Muslim split. Remember, the Iranians in the minority, the majority Sunnis dominated by Saudi Arabia. So the Shiite minority, it's about 20. I think it's about 25% of all Muslims are Shiites. Excuse me if I got those numbers wrong, my friends. But anyway, so that gas field and the infrastructure, attacking the infrastructure means that, when this war comes to an end, as all wars do, but how long it's going to go on for is obviously a big question. We've seen that in the Ukraine-Russia situation at the moment, and it's fourth year. So, obviously all that infrastructure needs replacing if it's being destroyed. And that's the conundrum that everybody's got. And that's why we're seeing this massive spike in energy prices. So let me just make myself a wee bit smaller. So that's obviously the main thing that's driving markets. So we've driven a stronger dollar today. Interestingly, sterling's up against the dollar today. Euro also up a tad, having moved significantly under the 115. Sterling's obviously in play before we, as we get the Bank of England ahead of the ECB. But 132 is calling cable by the looks of things. Euro already under 115. The key area, and the yen come down a bit again this morning, but yesterday's close took us within a smidge, within 15 pips of 160. So 140.59.85 we closed last night. We're down at 159 again this morning. But as you can see, we've been over 159 for the last 6 days now. If we move a bit down, so the dollar's a wee bit weaker this morning. But let me just make myself a little bit smaller. Guys, as usual, any questions about anything, whether it's gold, Bitcoin, or any other asset you want me to have a look at or comment on, please let me know. Let's move that there. There we are. That's a bit better, I think. There we are. So yeah, the background looks, you can see my green screen's also not in the right place in my new office. You can see we're on the top floor here, the second floor. You can see the sloping ceiling behind me. But anyway, let's crack on. So sterling very much in play. Lots of chatter earlier in the year about rate cuts from the Bank of England. That certainly isn't happening today. Sterling currently trades at 132.90 against the dollar. We are just a minute or so away from the announcement. Obviously, last night we had the Fed not changing anything either. And interestingly, the more that Powell spoke yesterday, the weaker the stock markets got. So the stock markets have taken away, or the markets have taken away from the Powell's comments, the excuse me, the statement from the main meeting that is likely to be only one rate cut this year. Analysts are still consensus remains for two, but the market looks like it's now shifting, perhaps only one, if any. Remember, obviously, we had the Bank of Australia, the RBA, raising rates earlier in the week. So the stock markets closed significantly lower yesterday. The Dow lost 768 points, 1.63%. The Nasdaq lost 1.46%, and the key S&P was down 91 points, 1.36%. Another big down day for the stock markets yesterday in the United States, 25, and we're down again today. We'll come to those in a minute. Let's just have a look at how sterling's going to react to the very much expected no change from the Bank of England. The other key thing from last night was Stephen Myron was the only one that was voting for a rate cut in the minutes, as we said. Let's just have a look at the Bank of England news feed. Oh, lost it. Well, it's across here. So, as expected, no change, 3.75% mean decision. Let's have a look at this statement. I've just realised I put a picture of, on my YouTube channel, I put a picture of the Bank of Japan's headquarters. I mean, they were meeting today, but not the Bank of England. I just realised the picture I put up was the wrong one. So, anyway, there we go. So nothing really, a bit like yet last night, really, nothing in this statement. I'm sorry, I'm just scanning through here. Rate was, interestingly, it was a 9-0 vote. We were expecting 7-2. So conflict in the Middle East has caused a significant increase in global energy and other commodity prices, which will affect households, fuel and utility prices, and have an indirect effects via business costs. Much more statement about the situation in the Middle East than we had from the Fed last night. CPI inflation will be higher in the near term as a result of the new shock to the economy. Remember, markets hate surprises; they hate shocks, and you can see that movement there in sterling. Sterling initially went through the 133 area at 132.92 now, and initially down. The MPC is alert to the increased risk of domestic inflationary pressures through second-round effects in the wage and price settings. So that's started to see. Obviously, earnings have remained quite robust here in the UK. Those that got a job, especially the bonus side of things. MPC is also assessing implications for inflation of the weakening in economic activity that is likely to result from higher energy costs. The committee will continue to monitor closely the situation in the Middle East and its impact on global energy and supply costs. We had this massive spike in gas prices in Europe on the European bourses, the exchanges this morning, because of that attack by Israel against Qatar and the oil field and the big infrastructure installations there. It stands ready to act as necessary to ensure that inflation remains on track to meet the 2% target in the medium term. That's blah, blah, normal blah, blah. They're all obsessed with this 2%. More to come, more details to come on the numbers. But interesting, it's the vote has gone 9-2 as opposed to the 9-0 as opposed to the 7-2. That was expected. So bank rate remains the same. So remember, last month we were 4-5, weren't we? Very tight split on the bank rate. Let me just show you stick it over here. The actual, this is me talk about it. You can see the actual numbers here. So no change. Remains at 3.75. So up top of the table. Bank of England 3.75% here. We were looking forward to some rate cuts, some easing for mortgage holders here in the UK. That hasn't happened. And the vote, surprisingly, not really surprisingly, even given what's gone on, this expectation of 7-2 was ahead of the war breaking out, which we are now well into the third week and our 20. Is it day 20 today or day 19? I've lost track. But whatever it is, obviously, countless lives are being lost unnecessarily. But we'll see how it all pans out. 9-0 the vote from the UK. Interest rates remain at 3.75. There's nothing particularly provocative. I'm not quite sure why we saw that move for sterling there, to be honest, in what was said there. There's nothing. They were just a bit more explicit, certainly the Fed and the Swiss National Bank were this morning, about the situation. So I suppose you could argue it's a little bit more hawkish, considering that we've gone from what was expected to be 7-2. Remember last time it was 4-5, so we've gone from 4-5 split. 7-2. Those wanting expectations, those still wanting a cut. But we stand plumb not to do anything at the moment, and yeah, which is probably why we've had this initial move up for sterling, and then we come down thinking, well, yeah, it's what it is. And really, this move here on sterling this morning is more to do with weakness in the dollar than any strength in sterling, I would argue, given what we've seen in the other crosses. Because if we look at the euro here on the 5-minute time frame, a little less so, but we still got Madame Lagarde and the ECB to come in an hour or so. Dollar yen is a bit more exaggerated, moving lower, following the Bank of Japan's no change and no rhetoric about any likelihood of rate hikes to come. They didn't say they wouldn't, basically, which is again this is added to this is a combination of a bit of a stronger yen and a weaker dollar. So that's only going to go in one direction. As you can see, we've been under the 20 period here on the 5-minute, and we've been trending lower all morning, and we went into the Japanese the Tokyo close. We were down, and now we've sunk again, coming into the Bank of England as well. So we're actually low of the day now at testing right into 159 itself. So whether we see some buyers at 159 or not, or whether we breach and keep going low, we'll see as the day rolls on. But certainly the rally to 160 was reversed on the Bank of Japan earlier this morning. But yeah, that's a combination of a bit of a weaker dollar, despite yields actually are still holding up. They went to... made a note last night. They went to 423.56. Yeah, it's highest since August. The 10-year yield last night in the US, but dollars is a tad weaker this morning. So let's just flip back to sterling. It's moved. Oh, interesting. There we are. Moved higher again. So we're back to 133. So it is holding that. So that that hawkish tilt has helped lift sterling. So we are now with that not moving now in March, we're now looking at about a 50-50 chance of rate hikes in 2026 from the Bank of England as opposed to cuts. Chance of that before the war and before this announcement was only about 40%. So that's quite a move, which is obviously helping this move we've seen in sterling move higher. It stands ready to act as necessary to ensure that CPI remains on track to meet its 2% target in the meantime. That's such a blah blah. But yeah, more direct comment on the war in Iran than we had from the Fed last night. Obviously, the Europe are much more dependent on energy imports than the US is. But this is a US-Israel started war, and they need to get some sort of resolution to it. Markets are very, very twitchy, as you might expect, and I say that attack on the gas field by Israel obviously will expect some sort of retaliation, or has had already retaliation from the Iranians. Has seen energy move higher again. So Brent went to 115 this morning. In the aftermath, 119 in the aftermath of that attack. It was down at 115 earlier, and we've actually slipped away another $3 now. So things may be cooling a wee bit, but it's still well over $100, and we're 110 plus 113. WTI this morning went to 99, still shy of 100 again. It moved down, but that's interesting. That's moved back up. Oh, this is 5-minute. That's why. And we're at 96.50 now, so still very elevated energy costs. And I can't show you the gas price here on on trade locker, but it's not record highs, but it spiked very, very significantly, more so than the oil price did this morning, because that was it was the LNG compound in Qatar hit very significantly, one of the biggest in the world. That last field, last south, it's called, isn't it? The actual oil field. Elsewhere, gold is continues to weaken. We're down at 4,625. Yeah, this has moved lower all morning. Well, it's not just all morning; it's been moving lower quite significantly from the breakdown yesterday following the Fed, or ahead of the Fed, and then a big move down this morning on open, and on European open, and then continuing to decline. So no immediate support level for gold. Next line in the sand is 4,600, and then 4,500. If we go up the time frames, you can see the big selling we've seen in the last couple of days. So whether it's central banks liquidating gold reserves because of what's going on, the strength of the dollar, doesn't matter, who knows, but we are moving lower, very significant, trending quite significantly here. See that little tick up here, around the 5k level from earlier in the week, has given up the ghost, and some big negative candles here on the gold chart, and the current one is just getting going as well. It's got another couple of hours to run and see what that looks like as well. But 4,600 is the next big round number. Next support area is this 5. You see here the 4-5 area from takes us all the way back to the end of January, when we had that charge low, that collapse lower here. So through that area there as well this morning. So yeah, be careful trying to catch the bottom on the gold market, my friends. Gold also down, silver similarly, extended moves to the downside as well, back under $70. It's last under $70 on an intraday basis there on the 5th of February, but on an end of day basis, it's all the way back here before the charge up started before Christmas. So silver selling off even more aggressively than gold initially on the war, and more so over the last few days. So the big news is silver is back under $70 a troy ounce today on the metals front, and across the copper also equally getting hit on the worries of inflation and how it's going to impact global growth. Crypto is back into the $70 range we talked about this time last week. We're actually under 70 at 69.75. So again, big old move down through our daily trend line. We talked about that yesterday, didn't we? Breached it significantly yesterday, and we've continued to decline, and we are under 70. So some big significant numbers and round numbers, some big support levels being hit by all these assets that we are trading, my friends. So stay vigilant. If you've got a trending market, like this one, big old move down, don't fight it, just go with the flow. The market's prices will find a natural equilibrium eventually when buyers and sellers are in balance, and we have equal supply and demand scenarios. But big move down there for Bitcoin as well. Markets are very, very twitchy. We just got the indices. I didn't show you them before, did I? I was talking about them. But I said big moves yesterday. Let me just recap like yesterday's closing numbers. 768 points we lost on the Dow yesterday. Massive move down. I forgot the daily time frame. You can see the size of the candle from yesterday. We'd had a rally up earlier in the week, bounced on Friday, on Monday from Thursday and Friday's sell-off. Didn't get to Thursday's opening prices though. We did on Tuesday, but Wednesday post Fed, we've moved lower. Again, if I just put this up and demonstrate how we moved lower. Yeah, sorry, not a minute, 1 hour. This was yesterday morning, 12 o'clock candle, we'd moved lower. Here is the Fed announcement at 6 o'clock, and we moved lower, and then post Powell's press conference, which started in the following hour, we moved lower and we found out where we were. Powell switched the microphone off at 46,000. So 46,000 is where the Dow trades here on the futures market, on the derivative market. The S&P 6,596. So we're back under 6,600. I say yesterday we lost 91 points, 1.36%, and under 6,600 again. 6,624 we've closed last night, but we're down again in futures, and the futures are looking for a weak start to trading in an hour or so. So it's a comment here just going across my terminal here saying Scott Bessent, the Treasury Secretary in the US, said we'll be using Iranian oil to keep price down. So does that mean when they eventually take Iranian oil out, or Venezuelan oil? That takes a lot of processing. But I'm just looking at another chart here on percentages. Crude Brent up 5.6%. WTI up less than 1%. So massive moves. Brent, big disparity between the two. And stock markets continuing to weigh on heavier energy costs in particular. So big old moves, big disparity between WTI and Brent, as you might expect. What's going on in the world currently? And the NASDAQ 24,300. Some really strong numbers. Talking about the NASDAQ and the tech stocks, really, really strong numbers from Micron. Yes, absolutely knocked it out of the park. Some massive, massive numbers. Their margin increased to 75% from it was pretty high at 70%. They doubled their revenue from the previous quarter, and it's 50, and they're expecting another 50% increase in revenue in the forthcoming quarter. It's a massive number, just eye-watering expectations. But earnings per share came in at $12.20 compared to expectations of $9. It's a massive, massive beat. I can't remember how the shares were down at one point, but it was from a numbers point of view, it's just incredible. Remember, they are the big memory chip maker, and they can't make them enough of them, basically. So again, simple supply and demand. Income 16.46 versus 12.1 billion. So it's a 30% increase over what the market was expecting. 17% of Micron's chips go to Nvidia. So I suppose the rapid growth we've seen in Nvidia shares as well is perhaps a lot of that may have been priced in. But that's caught my eye last night. Big beat for Micron. See what their shares are doing pre-market. But the trends remain set, guys. Be careful trying to catch any bottoms here. Nikkei was down 3.4% and over 2% in Hong Kong when markets closed over there. So Europe is down, the DAX is down, the FTSE is down, as we just saw, and it's gone lower since the Bank of England's announcement. Not much, but there's the initial ranks at 12 o'clock. The initial announcement at 12 o'clock, and we continue to move lower. And the 10,000, big round 10,000, is now only 30 points away. FTSE down 2.5% today. The DAX down 2.55%. So it's not all doom and gloom. The trend is down. So these mean reverting strategies. Careful trying to catch them. This is a trending market. As you can see in the under half of the Bollinger Band, under half of the Bollinger Band, all the way really since here, even on this 5-minute chart this morning. So moving lower, and new lows of the day being hit now here in London on the FTSE, and the DAX under 23,000, 22,880. So you pick your asset, you take your choice, but the trend remain to the downside. So again, just to recap what the Bank of England have said, there is no change to interest rates as the market had priced in and expected. The big surprise, and a bit of a hawkish surprise, was the fact that the Members of the MPC, the Monetary Policy Committee, all agreed. There was a united 9-0 vote for no change in interest rates. Remember, just last month, they were split right down the middle, 4-5 for interest rate, for no change. Four guys wanted cuts last time. It was expected, two of them were expected to still hang on, looking for a cut, but that's come back. One looking for a potential rise, and now the chance of an actual rate hike from the Bank of England, taking it back to 4%. Unfortunately for us, us guys here in the UK, has now risen to 50-50 from a little under 30%, a little under 40% this time yesterday, or even at 12:30 earlier on. So yeah, 10-year yields now 4.30. So they've moved up again from yesterday. Yesterday 4.25.56. So now 4.30.43. The benchmark 10-year Treasury yield. So spooky markets, risk off very much so, and even oil. Sorry, and gold is part of that risk off. Bizarrely, selling off the 2-year, the short end here in the UK has gone back over 4.40. 0.8 on the 2-year gilt here in the United Kingdom. 27 basis points on this talk of inflation, the increased inflation risk from the Bank of England. We're going to see that. We've seen that already from the Bank of Japan and the Swiss National Bank this morning, and we're likely to see a similar comments from Miss Lagarde and her colleagues on the ECB. The ECB. Where are we now? We're at 12:20. The ECB statement comes out in 10 minutes, as it does. As it's Thursday, so we've got the claims from the United States in a minute, and the Philly Fed, and then in 45 minutes. So we'll stay with you until the weekly claims are out. It's our normal Thursday announcement. Our key data point on a Thursday is the weekly claims, and the Philly Fed as well. We had the Empire State earlier in the week as well, and that was quite significantly worse than expected, negative 0.2 from 7.1 last month. So see if the important Philadelphia manufacturing index is the same as well in a minute. So we'll see what that looks like. But you see, as far as the markets are concerned, it's going to have some big shock to move, to jolt them out of their down trend. So markets remain in a bit of a dour state, waiting for some updates, perhaps from Washington. But I said that article from that Reuters posted as an exclusive this morning was a bit dour as well. But they sourced 4 or 5 different commentators on guarantee of anonymity. So there's obviously with military plan, there's all sorts of things going on, don't know, so we as the general public don't get to know. But it's it's really the signaling, the rhetoric coming out of Washington is still very, very confused and very somewhat. The president looks like he's not quite clear about what's going on and what how this is going, and how resilient the Iranian regime has been. Obviously, yesterday was from Trump's point of view was good news, decapitating 2 key leaders, but the missiles still keep flying out of Iran, obviously, as well as into Iran, but they're far from done yet. The RGC, so we'll see how this goes on. But obviously, ordinary people are suffering really badly. Both Iranians, Israelis, don't forget the Israelis, and obviously residents and people in the Gulf as well. So war is never good. But will their goals be achieved? Still remain quite questionable, I would argue. But anyways, it's all a bit dim and dour. But as traders, we trade what we see, not what we think, and markets are moving. So let's have a look at what I would have been doing this morning if I was on the DAX, or looking at what the Dow might be doing here going into the open. It's just another trading day, so if we, let's have a look and see if we were going to turn this up to the hourly time frame. So the trend was, it was a trending day yesterday, which was down. We're trending today, which is down. There's my, where we are, where's my pre-market high, pre-market, oh, there we are. There's pre-market high for today. Shows the last time we did that. So that's our pre-market high today. Our pre-market low is currently where we are now. So this is not great, is it? But it may find a level. You would have argued it could have been at 46,000, but that's been breached now. We're 46,850. So I don't know where my pre-market low has gone. It's lost in there somewhere, isn't it? It gets in there. I can't remember these. Those trades we did yesterday on the 5 minutes time frame. It's mean reverting strategy. No, it's not great, is it? Well, we didn't touch the outside, but it's been trending lower. There's the last touch. So it's got a bit of a weak rally there. So that would have gone long there as a mean reversion. That was perhaps the low of the day at the time, interestingly. Just above 46,005. So it ticked up a bit. Got enough energy on that one there. It's what's the hourly candle list? Sorry, it's the hourly candle. So at 2 o'clock. But yeah, it created a pre-market high and then it's rolled over. And then the hourly here has rejected the 20. There you go. See, it's trending. It's not mean reverting. So the hourly is still down. It's been down for the last 3 hours. Resistance is through here at the 20-hour moving average. That's our resistance for the day, 46,200. Pre-market high was just above that of 46,300. So the hourly is down. Okay, so the 15-minute is also down to the downside, rejecting highs. We're under the we've been under the 20 period here, down. So it's not reversing, is it? We need to look at trending markets for today. That's what that's telling us. So somebody want to pick one? Let's pick the one we did a little webinar on last time. There's super trend, and you would guess that's red. There we are. It was a bit green, then it's gone red. So here on the 5 minute, the super trend would have gone short there at 11.35. Our stop loss, catastrophic stop loss right about the super trend all the way up here, but I'd be happy to have it at the 50 period EMA. So it's gone against us. Hasn't stopped us out if we'd had it up there. We'd had it a bit. So yeah, I would have would have gone down. I'd have pulled it down to down. I'd have been stopped out, to be honest. But I've been happy to have re-entered here on 12.15. Not knowing obviously that was going to happen, but simply because we've made a new low of the day here at 12.15. And then we've moved lower again. So I'm just trailing the stop loss down now. If I was trailing this one, you can see there. So trending shorter. Any clearer setups on the moving average strategy or the MACD and SAR here on the 5 minute? That's a bit choppy, but still biased to the downside. It's the trouble with the shorter time frames. Hourly is very much interesting. And even the hourly is chopped around to an extent. There we go. So that's gone down and it's crossed up. Oh, it's a bit more hesitancy there. So we might be crossing down again there on the hourly. The 5 minute is used to trade from short there. And then it's flipped here. So it's giving quite a bit back there if you've waited for that flip. Probably got out on that one. Then it's gone. We're still short, though, aren't we? So we're looking to go short, and that would have gone short again. That's another one that's gone short, this time at 12.20, because we're now as a continuation to the downside. So that one has gone short there into the open. Still an hour away the open, and we got the data coming dropping as well. So just be careful about that high impact. But that would have gone short on that one. Let's leave this one on, see if the trend continues to move down. So that would have been short from there. Or the last trade would have been short from there. That's green. Let go. Stop loss, massive distance away. I'd probably add it through here initially. And then if we go with the trend, I'll move it down. So stop loss here. There's the entry candle. Probably doing that. 2 candles back. That's my stop loss. on entry there at 12:20. And there's 5-minute time frame, and nicely in the money. See how the news moves the data. So we've got claims and Philly Fed about to come in, and at 1:15 in 45 minutes we've got the ECB. I'll come back for that, and I'll just mute everything and restart at 1:15 or 1 o'clock. I'll be back at in half an hour. So claims about to drop. So let's see what happens here. 200, very, very robust that balance in the jobs market. So lower again, 205,000 this week. Initial claims. I wonder what the continuing claims will look like. I'll check that on the investing calendar. So it's got the data in there. So wait for that to come up and I'll bring that up for you. And the Philly Fed, interestingly, better than Empire State. So flying in the face of what we saw in New York, Philly Fed manufacturing actually better than expected, which is a bit of a surprise, but a bit of good news there for the US economy in Philadelphia, big swing state that went to Trump again. So flying in the face of what's going on in New York, we are beating expectations. Remember yesterday we were talking about the PPI being hotter than expected. Well, manufacturing here in Philadelphia coming in at a very robust 18. That's the best number since we had since September. And we take September out, it's the best number since that outlier back in January 2025 as Trump was starting his second term. So strong number for Philadelphia manufacturing. Lots of chip companies up there as well. High tech companies up in Philadelphia. So that's a nice positive bit of news for the US economy. And to be honest, so is the unemployment claims. Only 200,000 is a very strong number. You can see how it's been declining, and again been better than expectations for six weeks or so now. But obviously, all that is lost in the worry and sentiment around the war. If I just bring in the other calendar, I bring in the investing calendar. You can see here that where has it gone? Here we are. The numbers are pretty good. As I said, Philadelphia there, 18.1 from 16 last time, and the best since that big spike we saw in January 2025 and July last year as well. So 205,000 for the initial claims. Continuing claims has actually ticked up, not much, but it's ticked up. So 1.847 million from 1.5 million. 85 million was expected. Prices paid have spiked up unsurprisingly. Orders are not as good as expected. CapEx is significantly up. Look at that, 25.8 from 14.4. And the 4-week average on the claims is now back to the under 211 at 211.75 million US people claiming. 200 million. 210,000 been claiming unemployment for more than 4 weeks, more than a month. So it's not happy times for those people with prices rising still and expected energy hikes feeding through. Are these one-offs? Lots of chatter yesterday again at the Fed about the Fed, and central banks should be looking through this energy crisis. It's easy to say that this is going to be like a short-term blip. If it is only a short-term blip, obviously the worry is that it drags on, and it becomes very difficult to get energy out of Strait of Hormuz. And the bigger impact is not necessarily the US itself, but it's the supply chains that are going to be completely disrupted. So this is going to take even if it stopped today, it'd take a while, quite a significant time. A lot of people have underestimated this, I believe, to actually get these supply chains going again, get these oil wells going again, get these gas facilities ongoing again, get the repairs done. Obviously, that's going to cost and both money and time, and then all these tankers and other container ships that are stranded and stuck in the wrong places, and then there's the backup effect, the domino effect of but it should have been there, to do this, and all that needs all those logistical nightmares need to be sorted out as well. So this is not good news, and the longer it goes on, the worse it gets. Undoubtedly, Friday marks the start of the fourth week of this war. So it's also interesting. Eid, it happens to be the Persian New Year as well on Friday, and the spring equinox as well. So anyway, I'll be back at 1 o'clock. I'm going to pause everything for half an hour. I'm going to go get some lunch, and we'll see what Madame Lagarde and the gang at the ECB have got to say. I'm not sure that Andrew Bailey actually has a press conference today. The minutes are all out. Yeah, I'm not sure he's actually got a press conference, has he? Or has he? 12:30? No, 12:45. No, so 40 minutes. We got the ECB, so we'll be back for that. I will see you then. So take care, my friends. Let me just switch my camera off and switch the microphone off, and I'll see you in half an hour. Hi, Ron. Stuart here. I'm back and just had some lunch. Very nice tuna and prawn salad. It was an interesting combination, prawns and tuna. But anyway, it was very nice. And I've got a little Pellegrino limonata in honor of the ECB, which are about to announce their interest rate unchanged. Oh, and I left you with this short we'd kicked off on the on our MACD and parabolic SART strategy, and it's just sort of drifted down lower. So we're happy now. I'm going to pull my stop loss down round about here now. So we've guaranteed a winner there. So 45,986 to 45,94. 925, so 60 points on the Dow, locked in, and we're continuing to decline, and we'll just keep trading. Remember, this is a trending strategy, so we're just going to trail the stop loss down. Might have got it a little bit too close there, but we're now a couple of candles behind. It's sort of this sort of level. I might have to put it up a little bit. I'd have put it up a little bit higher there. There we are, above that wick of that third candle. There we are, 935 from 986. So call it 50 points bagged. And there we go. I do that every day. And it's happy days, my friends. Keep those losses small. The trend is still nicely down. We've got, in fact, an increasing trend. We've gone from pink to red, and we're continuing to move down. Anyway, we'll leave that as it is, and we'll come back to it shortly. Where are we? Let's have a look at what the Euro's doing, because we've got Miss Lagarde and the gang in a minute. So for just bringing the Euro pairs this time, Euro dollar 14.9. So we come back a wee bit, actually. Interestingly, let's just go back to our Bollinger Band strategy, stochastic strategy. We've got most of the indicators on there. So with the dollar's weakened here since the this morning. Euro was down here. 114.43 was the low, and we've started to move back to the upside since the Bank of England's announcement. Since that US data, the Philly Fed was much better than expected, and claims 205,000, weren't they? So ECB in a little over 10 minutes with their rate announcement, and Euro still under 115, but likely perhaps to test that in the aftermath of what is said on Miss Lagarde's press conference. I was saying just before I went away, I don't think Andrew Bailey and the team had a press conference from London. I'd say slightly more hawkish. Interesting. I'm just seeing some other comments here from Bailey. Bailey noted that the starting point for his shock is a real economy with limited pricing power, so there's still an easing bias. The MPC will learn more by its April meeting about the skill and duration. That's true, as well as possible second round effects and implication for monetary policy. So obviously another month before they all meet, if not longer for some of them. But yes, certainly the this continues. Obviously the April meetings will be very, very key. They're probably very, very key anyway, but we might see some movements before then, inter-meeting meetings as well. So that could be key if this shock continues to move forward. Anyway, that was the Bank of England. Let's bring in the current players at the ECB. So obviously the bank's being perceived to be more on the hawkish end. That's certainly from the Bank of England this morning, the Fed yesterday. So Euro here, and let's bring in the 5-minute time frame. So again, let me just bring in the in our calendar. So this is what we've got to come. This is the investing.com 5 minutes one. So the DFR at 2%, the key main rate 2.15%, marginal lend at 2.4. All of those are not changing today, and there is a press conference scheduled with Miss Lagarde and the gang. And again, I will wrap up before she starts talking and go and watch separately and sees what she's got to say. And again, just like yesterday, we may see some more volatility during her question and answers session, like we saw yesterday from Jay Powell, rather than the actual statement, because there's not a lot they can say. Be interested. I'd say the only I say that the hawkishness came from the Bank of England was that 9-0 vote. Maybe a similar tone from the ECB. We'll see. There is an actual vote here, but be interesting to see how the discussion has gone over the last couple of days, given that the war's obviously been raging for 3 days, and the news yesterday was very significant, and the Israeli strike this morning was quite significant. So this idea, we've been well above our 2% target for inflation across all of the central banks for a while now. 5 years, we're saying, as far as the Fed's concerned, but the stock market continues to decline. Remember, the US stock market's about to open in 15 minutes as well. So, and as we saw on our Dow trade, they're continuing to move to the downside. So, is anybody here? Anybody got any questions? Let's have a quick chat. Check the chat box. No, there's nobody got anything to say. Okay, so let's see what the central bank in Europe from Frankfurt has got to say in a minute or two. Nothing's really changed since I was last with you half an hour ago. The trends remain in place. There's euro declined the attack in the last 10 minutes of 150. Euro pound, I didn't check that this morning, did I? So here's the where's my 12 o'clock? What's the 12 o'clock one? That's 12 o'clock. There's the bank. There's a statement from the Bank of England this morning. So we drifted lower, and then we reacted higher following the vote. We didn't move, but the hawkishness has been deemed to be beneficial. Or weakness for sterling, so euro, dollar. This is euro pound. Sorry, back to 86. This is euro pound. Yeah, euro pound 86, 40 range. If I flick up here just before the data comes out, the trend has been down from this big rally to 88 towards the end of February. So sterling's been improving as the weakening euro, and the energy impact on euro is more significant than it is for the UK as this war has continued. So euro pound hit a low earlier this week at 86.14, low we hadn't seen for a while. Euro had been up against the weaker sterling. So 88 is quite an historical high for euro sterling as well. So 86.40 we trade as the ECB statement comes out, and the thing to read really will be how the words and the paragraphs really about the impact of the war. So let's just go back to the euro dollar. Update today so far. See, that's the daily time frame. So update date back under 115 yesterday, big down day as we'd had it on Friday, up on Monday, up on Tuesday. Couldn't hold the 115 and under that most of yesterday. So we're going to recover back over 115 today. We'll see. So we have been so it's an update, down, up. There's the last trade here using that mean reverting strategy to the upside. It's really again another trending day. Euro up from the lows here just after the open, so we were down during the Asian session. European open here at 8 o'clock took us lower, and then we recovered up, down, up, sideways action here. topping at 1480, and now we had a rally new high of the day at 1496, just ahead of the announcement. And let's see if we get sold off from here, or we go back to move to 115. And there's the anticipated volatility as the statement has come out. Obviously, the ECB relieves rates unchanged as expected. And the details are just coming through here. Look at some bullet points. The refi rate, as I just said, 2.14. Deposit rate, 2.4%. The futures options here is looking like a 64. Price is now pricing a 64 basis point hike in rates for the ECB as energy prices in Europe surge. So that's rallied quite significantly. So hence the weakness in the euro here, having ticked up earlier. The hikes have been priced in, and we're now back down 114.83 at the moment, so 64 basis points for 2026 rate hike. So again, more hawkishness from the ECB to come potentially. Remember, the RBA are the first to move. They've already moved. No, we're going to move anyway, regardless of the war. But even down in Australia, the impact of the war in energy costs can't be ignored. Excuse me, drinking out of the can, but that's a nod to my European friends. 114.83. So euro weakening a tad on the numbers coming through. So a quick look at the DAX has done. DAX might have ticked up a little bit. Just a little bit, indeed, but the trend is 5 minutes here. The trend is clearly still down today, but we may have found a floor. We went as low as 22,750. Interesting number. So there may be some more upside here for the DAX, but it's very much against the trend if it is. So be careful trying to run that too high. And the same with trying to short the. I'll buy the euro too much. So euro 1486. Bit of volatility. Looks like it's not going to get to the 115 handle in the immediate aftermath. Sterling, euro pound 86.30. So that's come back down as well. So euro weakening on the statement. And let's see if I can find some more details coming through. War posts. Downside to growth risks, obviously, in upside inflation risks. So again, similar wording to what the Bank of England have said. ECB leaves the rates as unchanged, as we said. The deposit at 2% and the refi rate 2.14. Euro's been climbing all the European session. It's up 0.35 of 1% against the dollar, but coming off now, literally, as we can see here as we speak. So euro pound 86.32. Bottom of our 5-minute Bollinger Band is down there at 86.27. So still 5 bips away, but moving to that downside 114.96. So it's recovered and against the dollar and pushing higher. So we may have. It looks like we're going to have a go and a breach of the 115 area on initial numbers. So there's nothing really. Just read so she will have a more elaborate, obviously, assessment of the economy and in this statement. So let me see if I can find the ECB, the website. I can't get the website for some reason. See if I can find a summary somewhere else. Share it with you. No, it's cranking slowly. So yields have moved down in Germany, up on the day, but down on the immediate news of that coming out. Again, she talks about data-dependent meeting by meeting approach. Nothing new there, but let's see what happens in about 40 odd minutes. So there, 115's been taken out against the dollar, as you might expect. We're up half 0.45 of 1% so far today. But the main news is obviously Brent coming off its highs, but still up 3.5% today. So all eyes remain very much focused on the war and the impact this is having on inflation and how the central banks are interpreting this. And are they going to look through it? Are they seeing this as a real, massive, impact to supply chains again, like we had with COVID? The longer it goes on, the more worrisome markets will become, and the more twitchy and more volatile markets will become. But euro against the dollar ticked down, and now it's ticked back up. Against sterling, it was ticking up, and it's moved down. It's remained down against sterling, and against the yen, also down from an initial tick higher on the statement. So euro weakening against the euro and sterling, but holding its move up against the dollar. But now that's giving that back up as well. So it's sort of an inevitable spike to 115 taken out. And is this trend going to continue to the upside in the next half an hour or so ahead of Miss Lagarde, or is she going to, she's very good at history shows very good at quite talking up the euro. So see if we can hold 115 during and after her press conference. As I say, yesterday we had that much more volatile movement during Powell's press conference than we had as the initial reaction to the statement as it came out. So let's just tick back to our DAX position. Not a DAX position, but where we were. So it's held its move higher so far, the DAX, but again, the 5 minute 20 period moving average has been quite a resistance area today in an overall down market, which still seems very much set. So see where we go from there. We are. It's rejecting that 20 moving average again there. So something else. There we go. I've got quite a movement there on the DAX. I don't know whether that's something new that's breaking or some analysis that's somebody's updated. Let's go back to our Dow short. We might have stopped as reversed as back. We were short on this one, weren't we? There we are. It's taken us back out. So we've that trade has reversed quite significantly. There we go. There's the 5 minute candle. We've got the touch of there, and certainly we would have closed anyway. But we locked in. What was it? From 986 to 935, just shy of 50 points or 51 points on that short from that position. That's now, although the parabolic SARS flipped and we've had that big reverse, but yesterday's short time frame. But there's the big reversal on the ECB. Stocks pumping higher, or certainly US stocks pumped higher there. And then return back down. That's the risk of these high impact events. But this strategy, it's had a nice old rundown from 1045, touched, so close the short at least on this candle. If you haven't been stopped out like that, we had there with that when we pulled our stop loss down. We did have it here, didn't we, immediately? But we're continuing to decline. So there we are. The blue is crossing the yellow, so that's looking at that may, on the completion of this candle, may be looking for a long position. But again, remember, it's very much against the trend. The long-term trend is very much to the downside, and this strategy, you can see with the parabolic SAR here, can be quite choppy from the parabolic SAR. That's why we use the MACD as the first indicator, and that tends to smooth out, but even that's been quite choppy. But we've had a nice smooth downtrend, which looks like it may be over as we go into 5 minutes before the cash open here. My power supply is not playing up for some reason. Brent up 4.95%, so that's ticked higher. Not as high as it was earlier this morning, where 12 or under 12, 13. Sorry, $113 a barrel on Brent. So lots going on, lots of volatility. That's how you want to trade it. Big moves for gold, silver. I've just got the aluminium one up here as well. Aluminium this morning in London down 6.2%. Silver's the biggest move, as we saw earlier, under that key $70 handle, and continuing to decline since as well. Big old, there's the hourly candle, big moves on silver. Gold, similarly, big old downtrend today, and still running big gaps there on the MACD and the signal line, and the histogram's getting stronger, so we are moving lower and lower again. So silver, even more an exaggerated move, we said earlier, and I've just seen the aluminium number down 5% today as well. So lots of movement going on. Crypto also back under the key 70 handle. Sorry, let me just put the other layout with all the details on, which is our Bollinger Band stochastic setup. Continue to decline, well under $70 now, 69,300. Stocks lower, crypto lower, gold lower, silver lower, indexes lower, energy higher, and uncertainty continues to swirl, and markets hate that. The central bank's trying to look through it. Be really interesting to see, say in half an hour, what Miss Lagarde has got to say. But with that, guys, I'm going to leave you. I'm going to go and listen to what she's got to say, and have a great rest of the day. Stay safe, my friends. Lots going on this week still. Tomorrow, we wrap the week with, I think, Canadian... some Canadian retail sales later on in the day, but I'm going to do a live trading session tomorrow for the European Open after the ECB and the Bank of England, obviously the Bank of Japan as well, as obviously announced the Fed this week as well. But see how the DAX in particular recovers or doesn't recover or continues to trend lower. So we're looking for that on the Open tomorrow. So let me just leave you with euro dollar. Back from its rally to 115, and quite significantly lower, down 15 points now at 150, or down 20 points away from 115 at 114.80. So the euro's turned around. It was a bit stronger initially, and it's turned back down. So all eyes on perhaps a stronger dollar again as we come into the US Open. Let's just hang around for the opening flurries of the cash session, and let's just look at the Nasdaq, S&P, or the Dow. Let's start with the Nasdaq. So the Nasdaq is continuing to decline. We had a spike following the ECB higher, but the trend remains to the downside. The hourly trend is very much to the downside. That's been short all morning. If we look at our moving average strategy, our set and forget strategy, I don't want to make a copy. I want to open a new light. Let's look at this one. We did have a super trend on. Let's have a look at the crossing EMA strategy. I won't use that one yet today. But here, 5 minutes. That's been short all morning, hasn't it? Our cross lower 1040. Stop loss up there to start off with. Trailing it down, retraced, got out, got short again, got taken. Well, again, if you were chomping around on the 5 minutes, got taken out. But we are lower into the open. Let's put the volume on. Here's the volume ticking up on the open. Volume been rising in the last half an hour. It's really interesting. So futures down 0.7, 0.9% for the Nasdaq 100, and the Russell is down 0.25, but we open to the downside, and here the Nasdaq 100, 24,115. That's moving a lot lower, and this is, guys, if we again, the trend has been lower, so just don't get your stop loss too tight. And there's lots of money to be made following a fixed strategy, mechanical strategy. Just follow the rules. Get out when you're losing. When you're winning, trail that stop loss down. Bag profits as quickly as you can, but don't rush either. Have patience, whatever you're doing. So the opening trade is moving is lower. We may find a floor at 24,000. Who knows? We're still 135 points from it here in the opening trades, but you can see the volume quite significant here. On the opening trade. So we just tick this up the time frames, go up to the hourly chart, and if I reset it for you, volume's picking up, not as much as they were yesterday at the moment, but we are moving to the downside. And look, these are new lows, and you can see there's that 24,000 we saw on the 9th of March for the NASDAQ 100. Are we going to have that tested today? And this is all despite there was massive that blowout win for Micron yesterday. I'm just going to go and try and find how they're opening the Micron. I know we don't do individual trades here, but let me just try and find Micron, how they're opening today. It's actually down 7%. Wow. Down 7%, 425, down 7%. So tech stocks getting hit quite aggressively again there, despite that big blowout earnings number yesterday from Micron, down 7.25%. Wow, who would have thought that? There we go. So what can I say? Exceptional earnings, but we are down 7%. As the panic about the future and the impact on inflation that these spikes in gas, oil, and other energies are having as we roll out, it's got to feed through some point. So down on the open on the NASDAQ, we're trending lower. We'd have been low, here on the 5-minute, we'd have been short this all morning, stopped out again there, but short there just before the open at 13.20 as the trend has held. We haven't broken over the 20. Yes, we broke over the 9 there, but short again there at 13.20 on my time frame, and very much in the money. And I'm going to lock some profits in there if you were short on that one. So take care, my friends. The Dow similarly, obviously we got stopped out on the pulling on that previous trade, but that was done and dusted, and that was money in the bank. Thanks very much. But the MACD will have flipped again, or the SAR will have flipped again. I'm pretty sure of that. There we are. So that's the hourly chart. It's the 5-minute one we were trading, weren't we? Yeah, there we are, flipping on open to the downside. This is still, obviously, this delayed still has crossed to the upside, interestingly. But if you'd had your stop loss, if you had taken that long there into the open, which is, very much against the trend, your stop loss would have had to be a long way down before below the parabolic SAR, which is a pretty catastrophic area. Would have been there. You'd have been stopped out on the volatility at the open. So is this going to? Is this a sign that we have got some buyers here ahead of 49,000 or around 49,900, or are we just going to continue to trip lower? I'll see as the day moves on. So take care, my friends. I'll see you tomorrow morning for the trading, the open and the DAX and the FTSE. The live chart, live markets from 8 o'clock. We'll be live from 7:30 tomorrow, Friday the 20th. It's Eid. It is the vernal equinox here in the Northern Hemisphere, and it's also Persian New Year as well. So stay safe, everyone. I'll see you tomorrow. Be good and just be kind. All right. All the best. Bye-bye.